If you're holding SoFi stock or thinking about jumping in, then this week could be a crucial one. The stage is set, and a storm of market-moving factors is on the horizon. From key economic data releases to potential catalysts from SoFi itself, everything is in motion. Let's dig deep into what's coming, what it could mean, and how the stock might react in the short term and possibly beyond. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. For giveaway and all stock analysis and update, don't forget to join our Stock Update Facebook group. Link in description below. Last Friday closed on a strong note for SoFi. Momentum was clearly in its favor, and that energy seems to be bleeding into the start of the new trading week. Early after-hours activity suggested some serious volume was already building, with over 150,000 shares moving shortly after the overnight session kicked off. This level of engagement typically signals the potential for increased price action when regular trading resumes and possibly a bullish open. Now, what could truly shape the market this week are three important data drops scheduled mid to late week. On Wednesday, we'll get the Consumer Price Index CPI, followed by the Producer Price Index PPI on Thursday, and then the Michigan Consumer Sentiment data on Friday. Historically, all three of these have triggered strong reactions in the market. Any surprise, positive or negative, could jolt SoFi's share price along with the broader market. These numbers serve as indicators of inflation trends and consumer confidence, both of which directly influence interest rate outlooks and risk appetite among investors. In terms of company-specific catalysts, there's not much in terms of earnings that should directly affect SoFi. The notable exception this week is GameStop, but its results will likely only cause ripples within meme stock circles. Unless you consider SoFi a meme stock, which is a stretch for many, there's little reason to think GameStop will impact SoFi directly. However, there is one upcoming event that might hold some weight for SoFi, the Zuo Tech Conference, scheduled for June 10th. During this event, SoFi's Chris Lapointe is expected to participate in a fireside chat. Although expectations are relatively low, especially given how underwhelming the previous fireside on June 4th turned out, it shouldn't be completely ignored. The last session offered little new information and mostly repeated recent earnings updates. Still, the upcoming session might contain a few surprises if management decides to open up on new initiatives. One area to keep an eye on is SoFi's potential entry into the crypto space. This has been teased for a while, and it's already public knowledge that crypto is expected to be added to SoFi's offerings at some point this year. There have been hiring moves and subtle signals suggesting that preparations are underway. If during the fireside chat Chris were to confirm something like a Q3 launch, or even just offer a more specific time frame, that kind of clarity could serve as a powerful short-term catalyst. The market thrives on narrative and anticipation, and even a hint of crypto is coming could generate a bullish wave. According to posts from SoFi community leaders like Tanner, features such as Level 1 market data and crypto access have been top requests from users. Any mention of these being close to launch could improve user experience significantly, and in turn, investor sentiment. These types of enhancements often go unnoticed by the general public until they're implemented, but they can be key growth levers behind the scenes. From a technical standpoint, SoFi is entering the week in a strong position. It recently pushed above its 100-day moving average at around $13.48, which is often considered a bullish signal by traders. The current price around $14.24 places it between a support level near $13.50 and a resistance target around $14.40. If momentum continues, it's very possible we'll see the stock test and possibly surpass that $14.40 mark soon. Beyond that, $14.96 becomes the next target. In the options market, there's also a lot of activity that might push the stock price around. Open interest shows large numbers of contracts at various strike prices: 36,000 at $14, 14,000 at $13.50, and 5,000 at $13. If the stock opens strong on Monday and stays above $14, all those $14 contracts go into the money, which often leads to a buying spree by market makers who need to hedge their positions. That alone can cause short-term price spikes. Looking deeper into options for this upcoming Friday, there's more open interest. 4,000 contracts at $13.50, 10,000 at $14, 21,000 at $14.50, and 16,000 at $15. These levels could become magnets for the stock as traders try to push it toward those strikes to realize gains. Should the price hover around $14.50 or $15 toward the end of the week, short sellers might begin to feel the pressure. With 13.61% of SoFi's free float currently being shorted, amounting to roughly 147.79 million shares, there is always a possibility of a short squeeze if upward momentum continues. Abnormal trading activity was also observed in the dark pool and secondary market on Friday after hours. This likely involved market makers adjusting their exposure, but it could also signal institutional interest bubbling under the surface. These behind-the-scenes moves don't always lead to immediate price changes, but they can foreshadow future volatility. Right now, the $13.50 level is serving as a reliable support zone, while $14.40 is the resistance level to break. If SoFi pushes above $14.70 and holds it, the chances of reaching $15 or even $17 grow significantly. Momentum and volume will be the key drivers. Conversely, if the broader market faces headwinds due to weak CPI or PPI numbers, or if sentiment sours based on Friday's consumer data, then SoFi may pull back, even possibly retesting that $13.50 area. As for Wall Street opinions, no major upgrades or downgrades have surfaced lately, aside from a sell rating issued by Bank of America last Friday with a $13 price target. The analyst behind that call has a 63% success rate, so it's not to be entirely dismissed. Still, in contrast with the current technical setup, the bearish sentiment seems to be losing ground. We also need to factor in technical indicators like the stochastic RSI, which currently shows that SoFi is approaching overbought territory. What this means is that any small sign of weakness, whether from SoFi's own news or general market conditions, could result in a brief sell-off or dip. Overbought doesn't necessarily mean the rally is over. It just signals that caution is wise. So what's the bottom line for this week? Expect volatility, especially around the major economic data releases. There's a chance for a nice upward move if SoFi can break and hold above $14.70. If it does, then a run toward $15 and even $16 is on the table. However, if the macro numbers disappoint or the fireside chat fails to deliver anything new, we could see a pullback. A retest of the $13.50 support zone wouldn't be out of the question. My personal estimate, SoFi is likely to close the week somewhere between $14.40 and $14.96, a steady climb with some bumps along the way. SoFi's future looks promising, but like any growth stock, it comes with its own set of risks and rewards. Let's see how this week plays out and whether SoFi takes another step closer to its breakout moment. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.